Uganda Bankers Association is an association of the banks in Uganda, represented by their managing directors. And we have chosen to initiate this financial literacy program to help to improve the understanding of banking services for the general public. We believe that by doing so, we are creating new customers for the banking system who are more knowledgeable, who will gain better service from the banking industry, and who will know their rights and be able to demand that they be treated appropriately by every bank in Uganda. We look forward to your feedback. Please feel free to write to us, to communicate to us through our website, which is Uganda Bankers Association, and also to go to your bank to give feedback through every bank branch or even on the internet. We thank you for working with us to improve the banking system in Uganda. Thank you very much.
It is possible to acquire different types of equipment and other movable assets you may need in your business by leasing the asset from the supplier through your bank. This is called asset financing or leasing.
Leasing is a contractual agreement between an owner of an asset and the person who wants to use the asset. So the owner of the asset agrees to lease out the asset to the user for a period of time. Now, it can be an operating lease where at the end of that period, the user hands the asset back to the owner of the asset, or it can be a finance lease where the user of the asset then keeps the asset after paying a small amount of money at the end.
In this arrangement, you have two parties. You have the lessor. The lessor is the bank that finances. Then you have the lessee. The lessee is the borrower, the person that uses that equipment. So these two sign a contract. And within that contract, the lessor, that is the financing bank, is allowing the lessee to use this equipment. And the lessee is undertaking to use this equipment and pay to the lessor or to the bank a specific rental payment with interest for a specific period. So, in short, that is what leasing is about. And after the lessee has taken this equipment or machinery and they've paid for it for the lease period, followed the lease terms as have been stated, then the ownership moves from the financing bank, who is the lessor, to the lessee. Leasing and mortgages are different. Like I said, the lease is a loan specific to machinery. Now, mortgages is also a loan specific to a residential property or a commercial property. Just to break it down a little bit more, a mortgage can be a home loan, it can be a residential loan, it can be a commercial property loan. Someone, let's say, a family, husband and wife, want to acquire a home. They can come to the bank, they've identified the home they want to buy, and the bank would lend them money to purchase that home. That is what we would call a mortgage. Or a business is looking to acquire office premises. So that business, a company, let's say, will come to the bank. They've identified the office premises they want to purchase. The bank can support them in form of a loan to acquire those office premises, or to build office premises, or to build a residential property. Also, a business can come and they're interested in acquiring a commercial building in town, on Kampala Road, on William Street. That business can also come to the bank for what we call a commercial mortgage.
To qualify for a lease offer, a client has to demonstrate capacity to use the asset effectively to generate revenue that will be used to pay for it. The client, however, does not require additional security, but has to make an equity contribution before starting to use the asset.
The asset itself will be the collateral. That's an important concept. That the asset that you are financing at that time will be the security. In many cases, the asset itself could be the source of the cash flows, but it could be one of the contributing factors to your cash flow. Take, for instance, it could be a business that is in, let's say, some form of manufacturing. And that asset that you are taking on board at the time is going to contribute to your increase in your production. But the asset itself is the source, is what will be treated as security. But essentially, you must demonstrate that you have the cash flows to be able to make the repayments, because it's cash flow based.
It is important for the client to understand the terms and conditions of the lease offer, as well as the suitability of the asset for the nature of his business.
In terms of eligibility, anyone is eligible to get a lease. The catch is, do you have a steady flow of cash flow so that you are able to meet the lease rentals or the lease payments promptly, either every month or every quarter, depending on the structure. So steady flow of cash flow is very key. Of course, you'd have to go through other requirements like apply, sign an application form to the bank. Of course, by the time you come to the bank for a lease, you should have put aside up to 20% of your contribution. If you have identified a machine of $100,000, $100 million, you should have up to 20% your own contribution to that machine. Also, you have to identify the machine as the lessee, because you, the borrower, you understand your business. You understand the type of machinery you need. You understand the capacity of that machine and how much business or how much productivity that machine can generate. So you understand the type of machine you want. By the time you come to the bank, you should have identified the machine you want. So you come to the bank with a pro forma invoice in the names of the bank.
Financial institutions are partners, and always think of your bank as a partner in your business, because the bank cannot exist without the clients, and at the same time, the clients cannot achieve scale without the support that banks provide. So that's very important. The first thing is to clarify what you want for your business, identify the need, identify the financial institution that you want to work with, and then approach the financial institution and talk with your relationship manager.
Once all the initial assessments have been done by your banker, the key consideration that they're going to now look at is what is your initial outlay into the whole project. You want, for instance, to buy, let's give an example, you want to buy a bus. Depending on which bank you go to, they'll ask you for an initial outlay which ranges typically between 20% to about 30%. So you have to raise that money, and then your bank will provide you with the financing for the difference. So your initial outlay plus the banker's outlay will be added up and then paid to your supplier. Then you have the asset with you. The typical durations of payment of those leases is about 2 years to about 5 years.
Asset financing has many advantages, including acquiring new equipment which have lower maintenance costs and longer service life.
When your asset is identified by yourself, remember the first example, it is identifiable. when the asset is identified, your banker pays directly to your supplier. So there's no room for you to divert the funds for another entity. Most businesses, when they get cash, sometimes there's a tendency to deviate from the initial plan, and it causes them some bit of problems in repayment. So with asset finance, you don't have that room.
Leasing enables the client to actually acquire the asset he needs and for which he pays in convenient installments to the bank.
We know many borrowers tend to have problems with securing their loans. So under the lease option, you use that machinery as security. Number two, the lease as a product has some tax benefits that, of course, many of the business people would want to know about. Depreciation allowance. Under the lease, you're able to claim wear and tear against you could call it taxable profits over the entire lease period. That is a benefit to the lessee, who is the borrower in this case. Under the lease also, you could say we are able to structure payments to match the customer's cash flow. In case it's a school and the school has taken an Isuzu bus for its student for over maybe a period of 4 years, that school, we are able to match the lease payments to when the income is received by the school. We know that a school gets its income every school term, isn't it? Which means that maybe 3 times a year, because there are 3 school terms for most of the schools. So we would be matching the bank's payments, the bank's rental payments to the school term. So at every school term is when this school is obliged to pay the bank.
Most times when you see on farmers who have grown so many hectares of maize and they're selling it as a raw product and they're not putting any value add, asset finance will be the best option for you to acquire equipment that could add value into that milling, the milling, packaging, all that value chain. You'll benefit from asset finance. So I will encourage our farmers to really think deep into what they're doing. Instead of selling products by raw material, they can think of value addition, and your financiers are willing to sit down with you to provide you with asset finance facilities. You've seen a lot of infrastructure development happening in the country. Roads are being built all over the place. So some of the equipment that around banks are really supporting the financing of this equipment to these institutions. We've seen the manufacture of maybe drinks or food, all that kind of stuff. There's one or two issues banks are involved in to support the acquisition of some of these equipment. And then the other projects that we also look at is the main thing now. You've seen we're supporting clients into the oil and gas business.
Most lease offers have insurance cover, which the client should know about.
One of the things with all kinds of insurance is that it creates a buffer for you, the business person, and for the bank to reduce the risk. So in the event of asset financing, because the asset is the security, insurance helps, especially if it's a movable security. Because then in the event of anything, you know that you are both covered, because the insurance company will make good. Take the example of a bus or a moving item like that. If it is secured, a truck, then you know that in event of a calamity, that part is taken care of. So insurance is quite important.
The option of asset finance gives you the opportunity to acquire new equipment without need for security. You are able to pay in convenient installments to your bank. And the asset is covered by insurance arranged by your bank. When you lease, you can use your cash flows elsewhere as the asset pays for itself.
Anyone who qualifies for such products, you qualify for a lease, you qualify for a mortgage, just go and speak to your bankers. Your bankers will be able to identify someone in that bank to work with you, to enable you meet all the required documentation, so you can enjoy some of these benefits that we've got to offer. Let's grow our country and our businesses together.